we continue to think that the characteristics we should be looking for is where there's a better earnings backdrop, where that backdrop has legs, and not just the stories that are purely about value. So to your question, can we continue to see this earnings advancement and better earnings ahead? Well, I think that some of these value sectors are going to continue to be challenged because of what you just mentioned. We can't just rely on rates getting higher and driving some of these rate-sensitive areas higher and impacting the more growth areas. I think we need to really think about where we see better earnings ahead and where institutional investors haven't really built up already these overweight positions anymore. That's going to be the key, I think, going forward here.
Where do we see better earnings ahead? Because a large part of that cycle has also been priced in, don't you think?
I do. We've seen that being priced into areas like the consumer, areas like financials, and materials. Not that I don't think there's still more upside in a lot of that, but what we haven't seen the complete full pricing in is more like the industrial sector. I think that there's still plenty of room to go in a lot of the industrial names, given the breadth in some of these industrials as well. Industrial still has a lot of expectations to be built in because we just don't know the extent of some of the infrastructure, the spending, the fiscal response that's going to continue throughout this year. And I would stay focused on some of those names and countries that have exposure to those areas as well.